Stablecoins have grown to become one of the most important and critical resources in the entire cryptocurrency economy, with over $100 billion in total market capitalization and typically being involved in most of the trading activity going on exchanges and on-chain. Stablecoins have become an absolute addiction for the cryptocurrency community. It allows for people to get out of the volatility of the market. It allows for collateralization and yield in DeFi and non-volatile assets. It is in many ways a breath of fresh air in the oftentimes roller coaster-like wild, wild west that is crypto and volatile markets. But there is potentially a significant risk going on with the stablecoin economy. And as statements from Chairman of the Federal Reserve, Jerome Powell, have just recently surfaced about stablecoins, the future and fate of our beloved stable assets in the crypto markets, like Tether, USDC, BUSD, DAI, TUSD, or UST rather, all of these assets, and their futures might be significantly impacted. Now, we can see from this chart, it doesn't take some rocket scientists to see here, that there has been not just a small growth in stablecoin usage, but since 2019, the actual role that stablecoins have played in the ecosystem has gone absolutely parabolic. And what's interesting about these markets is once stablecoins are issued, they're typically very rarely taken out of circulation. Stablecoins are a one direction up only game. As you can see, almost every chart only grows in the amount of stablecoins they have. Now, stablecoins are also a very, very interesting mechanism because usually when people trade in and out of them, they are exchanging their cryptocurrency for those assets. So usually to create a stablecoin, for example, Tether, there needs to be a certain amount of money collateralizing those assets. But what's really interesting is that money stays in the hand of the issuer of the stablecoin. So when I create a stablecoin, I have the dollar, and then I create a US dollar representation of that dollar. But I also still hold the dollar in a bank account. I'm not actually sending that dollar physically all over the world. So then I send the stablecoins out, and in exchange, I get valuable coins like Bitcoin and Ethereum or other types of collateral. So now I have the dollar in my bank account and the collateral that people are using in exchange for those stablecoins. And so I've actually created an interesting sort of pseudo bank where I control all the assets. Not to mention that these stablecoins are in rapid and insane demand, and they keep growing. And so it's a very, very healthy and very, very profitable business to be creating popular stablecoins. Why do you think Coinbase did it? Why do you think Circle's been doing it? Why do you think Gemini has done it? Why do you think Binance has done it? Stablecoins are a very necessary part of the ecosystem. They're also extremely profitable to own and maintain because then you can do money management on the money that's just sitting idle while your stablecoins are out there being exchanged for real hard-earned cryptocurrency. Very interesting stuff. Let's go ahead and hear the comments that Jerome Powell has just made about stablecoins so we can get an idea of what might be coming to this market.
But there are some risks with stablecoins right now. Are there not? Are there concerns you have about stablecoins?
Stablecoins are a lot like money market funds or bank deposits or a narrow bank, depending on the terms of them, that kind of thing, but without the regulation. And I think we have a tradition in this country where the public's money is held in what is supposed to be a very safe asset. We have a pretty strong regulatory framework around bank deposits, for example, or money market funds. That doesn't exist really for stablecoins. And if they're going to be a significant part of the payments universe, which we don't think crypto assets will be, but stablecoins might be, then we need an appropriate regulatory framework, which frankly we don't have.
So as you just heard, Jay Powell is very, very aware of what's going on with stablecoins, yet considers them completely unregulated. Though, to be quite honest, something like Circle, who actually proves and audits their accounting and their holdings, you could argue is pretty highly regulated, as well as users who get access to these funds and these mechanisms typically have to go on and off through exchanges, so you have points of KYC. But what matters here is that Jay Powell's statements suggest that there is regulation coming to the stablecoin market. Now, especially Jay Powell's comments in concert with this particular piece of news that Janet Yellen or the U.S. financial agencies will meet up to discuss stablecoins in an interagency working group convened by the president. This is definitely some indication that there is some significant regulation on the way. Now, will this regulation be bullish long-term? I do believe it will be if you're able to put into place some significant regulations where people know that they can operate in the light of day in a regulated fashion. That'll bring a lot of money off the sidelines and into stablecoins. Those big billions and trillions that have been waiting to get their juicy APYs in DeFi, well, they need to know that these assets that they're trading into are regulated or that will be around. Now, I also think that some of these stablecoins are too big to fail. As we've seen the case with Tether and USDC, I think these two assets are too big to fail and will most likely continue to exist, and that we will see a period of them getting fully compliant instead of seeing them get shut down. Because obviously, if you're shutting down over $100 billion in market activity, that could cause systemic risk to crypto. And we've already seen the articles where there is a belief that crypto could cause systemic risk to other markets. So crypto is gradually becoming more and more ingrained in mainstream markets, mainstream investment and investors and banks and asset managers. Therefore, having some systemic risk to the crypto industry is now becoming, hopefully, a too big to fail type of industry. Now, if that is the case and we are right about that, then this is to be looked at, in my opinion, as a bullish moment, having some seriously clear frameworks for stablecoins to thrive within. However, the more you dig into this, the more that you see that a regulated stablecoin that actually has the green light onwards and upwards is a huge threat to the central banks and the CBDCs, which they could completely control, versus stablecoins, which are kind of being controlled by a litany of other actors. So I do believe that this is one of the most important potential turning points for crypto, and it could be an incredibly bullish one. It also could have some short-term, very bearish outcomes in the market. Now, I have heard some information from a typically reliable source that there is some potential new regulations coming in the form of KYC regulations, and they're going to be aimed a lot at stablecoins. This makes a lot of sense because obviously stablecoins in their current form tend to kind of mimic bank accounts, which are obviously very highly regulated, but we will have to see what happens. I do think that this is one of the most important topics in crypto, and I think that there will be some news around this in the near future. I also think that it will be over dramatic, overhyped, and if it does lead to some serious downside price activity, I'd see that as a great opportunity, as these FUD storms typically are long-term bullish, short-term bearish.